Do you want to invest in AI but have no idea where to get started? Well, this is the episode for you. Welcome to Get Started Investing, a show that helps you make the most of your money. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm good, Bryce. I'm very excited, and how could I not be after that intro? Because yes, I want to make my money work for me. Yes, I want to invest in what is perhaps the biggest trend emerging in technology and in markets of this decade. And yes, I want to know where to get started.
Depending on who you listen to, AI is not only the biggest transformational change of this decade, but in history.
Yeah.
Yeah. So, whew,
or it's a bubble.
What a time to be alive. No. This is different. In today's episode, we're going to cover off the different types of ETFs available in Australia to invest in the AI trend. We're going to go through the three main ones, have a look at what's under the hood, and have a chat about some of the companies there.
Now, this episode was inspired by Lockie, who commented on one of our YouTube videos. He asked, would love to hear an AI-focused ETFs comparison episode on one of the podcasts. I've noticed interesting and significant differences in sector breakdowns between some of the different ETF products harnessing the AI movement, and would love to hear this thought out. It is the one category of thematic ETF I'm struggling to decide on an ETF product for currently. Would love to hear your thoughts. So Lockie, thank you for the question. And I think you've picked up on a really interesting trend that is emerging. I think a lot of thematic ETFs will look quite similar under the hood, but with some of these AI ETFs, they are quite different. So as Bryce said, we're going to unpack the three most popular here in Australia, and talk about how they are different and how you can think about them individually.
Now, before we do that, it's worth actually just reminding ourselves of the opportunity that that AI presents. In terms of global market size at the moment, it's valued at about $233 billion. But there are predictions that it could grow to as much as just shy of $16 trillion in the next 5 years.
Yeah, and I think
incredible growth.
I think most people will have heard about DeepSeek at this point and the innovation that's happened there, and all of the trends that we're seeing are just seeing, cheaper and more ubiquitous AI, which is going to lead to more and different use cases where, when AI was at a certain cost, potentially they didn't make economic sense. But as AI becomes cheaper to use and to integrate into other products, more and more interesting use cases are going to emerge. There's going to be huge winners. There's going to be huge losers. If some of these trends play out, like the way we live and interact with technology is going to change in really profound ways. And I think for me, AI is one of the clearest use cases that you've got to be an investor. Because who knows how our lives are going to change? Who knows how our work is going to change? Who knows if two idiots speaking on a podcast is going to be a viable job in 2030 when we're awash in a sea of AI-produced content?
Yeah.
But what we do know is that some of the biggest winners in AI are companies that already exist, that are already listed on the stock market and are already available for us to purchase. And so thinking about who's going to be a big winner of AI is important when our jobs might be big losers.
Yeah.
It's a morbid way to set it up, but it is something that is on my mind.
How exciting. I'm so excited by it. I mean, just imagine, just thinking about what's in front of us, and to your point, the opportunity we have right now to get in on some of these companies at not infant stage. This shit's been going on behind the scenes for a long time.
Yeah, Nvidia is the biggest company in the world.
Yeah. But it's now just sort of becoming so prolific from a consumer point of view.
Yeah.
That now this is where true wealth can really be made.
Yeah.
And we have the opportunity to try and figure out, to your point, who are these winners going to be. And right now we have the opportunity to invest. We don't have to choose exactly one or two companies, because there are options to, as the tide rises all the boats.
Yeah, you almost nailed that.
What is it?
A rising tide lifts all boats.
Damn it. You get what I mean. You can get on board one of the boats.
So this episode, we're really going to focus on the AI-specific ETFs and talk about some of the sectors that these ETFs cover. The semiconductors, some of the infrastructure and data centers, and then some of the application layer companies, the software players and services. But before we do, just one quick note on index ETFs. Because I think at this stage we're kind of realizing that the benefits of AI will be diffused throughout the economy.
Yep.
And the cleanest analogy is the internet, because there were big internet stock winners. There were also big losers that were hyped and raised a lot of money and didn't win. But really, if you think about the value creation of the internet, every company really benefited. Our lives all changed in really profound ways. And so there is an argument that the best way to invest in AI is to not try and pick winners and just buy an index product that will see the biggest companies emerge and become bigger weightings in the index over time.
Just like we saw with NVIDIA.
And so it might be a technology company that becomes the biggest winner, or it might be a construction company that 10x's because some AI-fueled robotic workforce lowers costs. Or it might be a logistics company because AI solves the final few challenges with self-driving cars, and all of a sudden they have a fleet of driverless trucks, and that's the biggest winner. Like, the idea that we know where the winners might come from is perhaps incorrect, and it'll be surprising winners. And it might be companies that don't even exist yet. It might be the Ubers and the Airbnbs that use smartphones and the internet to emerge and become listed companies and then become multi-billion-dollar companies. So there is an argument that buying an S&P 500 or a global index or a NASDAQ 100 might be the way to go.
Absolutely, yeah. Nothing wrong with that. But
that's not what we're here to talk about.
For the purpose of these episodes, we will acknowledge that. But now let's have a look at the specific AI ETFs that are currently listed here in Australia. So firstly, there's the Global X Artificial Intelligence ETF. There's the BetaShares Robotics and Artificial Intelligence ETF and the Global X Semiconductor ETF. There are a few more, as Ren said, the FANG Plus, etc. But for us, these are the three that stand out as the key ETFs that are saying, hey, if you want to hit this trend, this is the product for you.
Yeah, like FANG Plus has Netflix and
CrowdStrike and a few other random things. Yeah.
Which might benefit from AI, but these are AI specific on the tin. So let's start with Global X Artificial Intelligence ETF.
So the ticker's GXA. To start with the purpose, according to the website, to invest in companies that potentially stand to benefit from the further development and utilization of AI technology in their products and services, as well as companies that provide hardware facilitating the use of AI for the analysis of big data. So quite general and then quite specific. So let's have a look at the holdings, Ren.
So some names that you're probably quite familiar with. The biggest holding is Meta. Everyone knows Meta. And then Tencent, the Chinese internet giant that owns WeChat. Accenture. People would probably wouldn't have expected that to be the third biggest internet
consulting firm.
Yes. Alphabet, Apple, Salesforce, Amazon, Netflix, IBM, Cisco. So some big technology names there, some surprising names. Accenture surprises me to a lesser extent. Like, I know Salesforce has been talking a lot about AI agents and they're trying to do a lot in the AI space. But for me, this ETF of the three that we're going to talk about seems more on the application layer.
Yeah.
It's like they're obviously like Meta's building Llama and stuff like that. But for me, the makers of this ETF have said, what are the companies that are going to utilize AI and drive economic benefits that way?
Yes. So, I mean, to build on Accenture, just got a few numbers here. So they've invested $3 billion to accelerate AI within their company. They're going to hire 80,000 people to expand AI expertise in their consulting services.
Did you say 80,000 people?
Yeah.
Geez, so much for AI leading to job losses.
I know, yeah. The company plans to double its AI talent to 80,000 people through hiring and acquisitions.
Now, from back to the ETF, the management cost is 0.57%. So that's kind of in line with the market for thematic ETFs.
Yeah.
And it is relatively new. So it hasn't even been around for a year yet.
No.
So you can look last 3 months it's returned 17%.
Yeah.
Not bad.
Yeah.
But obviously, like, that's not a track record
No.
to hang your hat on. You want to see, years worth of track record. But if that doesn't mean you shouldn't invest in it, but it's like you need to be convinced of the thesis and the holdings.
Yeah.
Yeah.
So what's missing there, Ren, I think when people from like a headlines and news points of view, and if you were to look at this just on name, you might be confused or think that you're getting NVIDIA, TSMC, all of those like more traditional. So it's very important you understand what you're buying here.
Even put TSMC to one side because it's in the supply chain. The fact that NVIDIA isn't a top 10 holding in a artificial intelligence ETF would surprise a lot of people.
Yeah. So do your research.
And that's been generous. All right, well, let's move on to the second one. BetaShares Robotics and Artificial Intelligence ETF. The ticker is RBTZ. Now, the purpose of this ETF is to invest in companies that potentially stand to benefit from increased adoption and utilization of robotics and artificial intelligence. So it's important to note that this isn't a pure play artificial intelligence. There is some robotics plays here as well. Obviously, they're going to be more and more related. Now, the other thing to note as you look at this ETF is it's quite concentrated. So it does own 45 stocks, which you look at and you say, that's a pretty diversified thematic ETF. But the top 5 stocks account for 45% of its holdings. So those 5 stocks are going to be the stocks that drive the overall performance. So Bryce, that is the segue to say, what are those 5 stocks?
Great segue. NVIDIA is the number one stock. 13% of the ETF is in NVIDIA. 10% is in a company called Intuitive Surgical. They're a maker of this. You should YouTube this. It's called Da Vinci. It's a robotic surgical system.
It's wild.
It's crazy. Yeah, definitely go and look at that. 9% in AAB. It's a Swiss maker of industrial automation and robotics. And then about 7% in Kayence Corp. They're a Japanese company that makes sensors and scanners for factory automation. I think they're pretty involved in some of the automakers. So, and then 5% in SMC, again, another Japanese manufacturer for automated control equipment. So quite a global, diverse list of stocks there, but very, very tied to robotics and AI.
Yeah, my gut it's more a robotics ETF than an AI ETF. In saying that, NVIDIA is the biggest holding, so that probably gets a tick for me over the previous one. But this isn't pure play AI. This is companies that stand to benefit from AI, surely, but you're investing on a thesis around mass adoption of robotics, industrial automation, and the like. Which I don't think is a bad thesis, but I think it's just being mindful about what the thesis is. From a performance point of view, it's been around a little bit longer. 2018 was when it was launched. 9% per year from there. Not bad. Yeah. Past 12 months, it's done 24%. That's a bit more exciting. But yeah, that 9% is kind of what you'd get from an index product. The thesis is obviously that the big leg of robotics growth is still ahead of us. That's why you'd be buying this ETF.
Yes. Fees, 0.57%, very similar to the Global XAI. And as Ren said as well, pretty standard for thematic ETF. So moving on to our last one, we've got the Global X Semiconductor ETF. SEMI is the ticker. One of the early players in the space. I remember talking about this on Equity Mates years ago, and it sat around and didn't do a lot, and then NVIDIA came on and it did a lot.
Yeah, well, it has done a lot. I mean, if we want to put the end at the start, performance since inception in 2021, it's done about 20%.
Yeah, it's been
past 12 months, it's done 25%. So it's done all right.
It's done very well. And of course, this is focused on the semiconductor industry, one of the biggest, I guess, components of the AI industry. Huge demand for the supply of chips and semiconductors, and NVIDIA is right in the middle of it, leading the way. Hence why it is now one of the most valuable companies in the world. So the purpose of this ETF is to invest in those companies that stand to benefit from the broader adoption of tech-enabled devices that use semiconductors. Top holdings. So again, pretty concentrated. The number one holding actually is not NVIDIA. It is Broadcom. So they're a semiconductor, enterprise software and security solutions company. That's 12%. 11% is TSMC, Taiwan Semiconductor Manufacturing Company. At 10% then is NVIDIA, 9% ASML, and 6% Qualcomm. So a lot of the big names that at the end probably first come to mind when you think about investing in the space. These are the ones that have been doing incredibly well over the last few years.
Now, Broadcom, people may not be super familiar with, but it just ticked over $1 trillion. So, and it's up like almost 90%, 80-something% in the past 12 months. So it's a name that has perhaps flown a little bit under the radar, but you're certainly going to hear more about it in 2025. TSMC, you mentioned earlier in this conversation, the market leader in actually manufacturing semiconductors, and then NVIDIA, which we all know.
Yes.
So much more, I guess, of the supply chain focused, similar with ASML, part of the semiconductor supply chain.
Yeah.
But some hot names, I think is fair to say.
Absolutely.
Yeah.
So those are the three ETFs that we think sort of, are probably best representative of investing in the AI industry. There, of course, will be plenty listed overseas as well, but these are the ones listed here in Australia.
So Bryce, riddle me this.
Yeah.
The past 12 months, Semi's done what, 21%?
Mm-hmm.
If we look at some of its top holdings, Broadcom, past 12 months, 87%.
Oofed.
TSMC, 59%. NVIDIA, 80%. Why has the ETF only done 20%?
That's a good question. Weightings?
Well, yeah, it's because as much
There's
as...
a shitload of other stocks in there.
Yeah, as much as this semiconductor story is super exciting, it actually hasn't really been a rising tide lifting all boats. It's been a NVIDIA and NVIDIA Associates led boom.
Yeah.
And it's... There is an argument, and I think Luke Larrative has made it on the show before, that everyone who's buying the semiconductor ETF should have just bought NVIDIA.
Yeah.
Because, you look at like the relative performance of NVIDIA and AMD, and it hasn't been a rising tide lift all boats. It's been a stock with superior technology and a lot of hope that the second in the market can catch up. I think that choice is just worth keeping in mind if you're thinking about thematic ETFs versus individual stocks. Is the situation the rising tide is lifting all boats, or is this going to be more and more a winner takes all market as everyone desperately scrambles for NVIDIA chips?
I would probably be going for the latter.
Not investment advice, but it's certainly worthy of consideration.
Yes, yeah. Now, to pull the curtain back, we don't have... Well, I used to own Semi. I don't anymore. And I don't have any of these ETFs in my portfolio. Not because I don't like them, but I think there are opportunities in the individual stock space that we're probably going after more so than just taking a broad exposure. And for me, a lot of the companies in the first two ETFs particularly, I've got covered off in exposure to the NASDAQ and the like. Meta, Alphabet, Accenture, Apple, Salesforce, Amazon, Netflix, got access to them all through the index. So I'm not specifically playing this, but I'm very interested in this theme nonetheless.
Yeah. And I think, NVIDIA is, depending on what day you look at the market, is now the largest or one of the largest companies in the market. I think it's about 6% of the S&P 500. So it certainly is moving your S&P 500 ETF as well.
Definitely. So Lockie, I hope that answered your question. I would probably think more carefully about perhaps choosing a few individual stocks that are right up at the top of these thematics. We also did a segment on Equity Mates investing a number of weeks ago. We'll put a link in the show notes where we actually went through all of the picks and shovels or type of investments that you can make that are all related. The data centers, the energy infrastructure, you name it, there is opportunity everywhere. But that brings us to the end. If you want to ask a question just like Lockie did, please submit to our Equity Mates mailbox. There'll be a link in our show notes and the description. Share the podcast, subscribe on YouTube, become a valued member of our community. Join us on our Facebook page. We love to hear what you think of our episodes and join the discussion. And leave a comment with your best ETF for this thematic if you can. But Ren, that brings us to the end. We'll pick it up next week.
Sounds good.